Warren Buffett, often called the greatest investor of all time. The Oracle of Omaha, a man whose name is synonymous with value investing and long-term success. But even the best make mistakes. And for Buffett, his biggest disaster wasn't in tech, wasn't in banks, and wasn't in crypto. It was in ketchup. Yes, ketchup. This is the story of how Kraft Heinz, the food giant behind some of America's most famous brands, turned into Warren Buffett's most embarrassing investment. Welcome to Kraft Heinz, Warren Buffett's biggest disaster, an exposé by Felix. The deal of the century? In 2015, Berkshire Hathaway teamed up with private equity giant 3G Capital to merge Kraft Foods and Heinz into one mega food conglomerate. The pitch was simple. Combine two iconic brands, cut costs, and dominate grocery shelves worldwide. Buffett called it a dream deal. Wall Street cheered. The new Kraft Heinz had nearly $28 billion in annual sales and instantly became the fifth largest food and beverage company in the world. But dreams have a funny way of turning into nightmares. The 3G Capital playbook. 3G Capital had a reputation for ruthless efficiency. Their model? Cut costs aggressively, slash jobs, squeeze suppliers, and maximize short-term profits. At first, it worked. Margins improved. Investors loved it. The stock soared. But here's the problem. You can't cut your way to growth. While 3G focused on slashing expenses, competitors like Nestle, PepsiCo, and Mondelez were innovating, launching healthier products, expanding globally, and adapting to changing consumer tastes. Kraft Heinz? They were stuck selling processed cheese and ketchup in a world that was moving on. The collapse! In 2019, the truth hit like a hammer. Kraft Heinz announced a massive $15.4 billion write-down on its Kraft and Oscar Mayer brands, admitting they were worth far less than believed. The company also disclosed an SEC investigation into its accounting practices. The stock collapsed, falling more than 60% from its peak. Investors were stunned, and Warren Buffett himself admitted it. He had overpaid, and the deal was a mistake. Buffett's painful lesson. For Warren Buffett, Kraft Heinz wasn't just a loss. It was an embarrassment. Berkshire Hathaway invested over $10 billion into Kraft Heinz and became its biggest shareholder. But instead of the safe, stable cash flow he expected, Buffett got declining sales, stagnant brands, and billions in lost value. He admitted publicly, "I was wrong." And for a man whose reputation is built on avoiding mistakes, Kraft Heinz became a scar that will follow him forever. The zombie brand problem. The deeper issue? Kraft Heinz represents the decline of old processed food brands in a changing world. Today's consumers want fresh, organic, plant-based, and healthier options. Legacy brands like Kraft Mac and Cheese and Oscar Mayer hot dogs? They're losing relevance. Kraft Heinz cut marketing, failed to innovate, and relied on nostalgia. But nostalgia doesn't sell in a world of oat milk, vegan burgers, and kombucha. Buffett bet on the past, not the future. And he lost. Why this matters? Kraft Heinz isn't just one bad investment. It's a cautionary tale about value traps. Even the biggest brands can decline. Even the most legendary investors can be blinded by old assumptions. Warren Buffett's disaster shows us that the future belongs to companies that adapt, not those that coast on yesterday's glory. Conclusion. Warren Buffett once said his favorite holding period is forever. But with Kraft Heinz, forever turned into regret. It was supposed to be a dream merger. Instead, it became his greatest mistake. This has been Kraft Heinz, Warren Buffett's biggest disaster, an exposé by Felix. Don't forget to like, share, and subscribe for more truth, more exposés, and more lessons from the world of money. Stay awake, stay aware. This Felix! See you next time.